Hello guys, welcome to HX Forex. I am African Rebel and this is where we guide traders from foundation to freedom. In this video, I want to emphasize more on price action. I want to emphasize more on structures. I always sing in our content, or I always sing in the groups and everywhere I converse with you guys. I always sing it. The trend line alone can't save you. The trend line alone isn't what's up in the market, right? If you are a pattern trader, or for those of you who claim to be Falcon boys, the trend line alone can't save you. Understand? You have to understand the market structure itself. You have to understand the swings. If you don't understand the swings, if you only plot trend lines, you execute those trades. There's something Mark calls I think I can't really remember the stuff, but holding behind. He used to always use that phrase, holding behind. Something is going to hold you behind. When he was talking about, if you were the episodes of Falcon, one of the episodes where he talked about using support and resistance or mixing indicators to your chart or on your chart so that you can be able to trade. He mentioned holding behind. These things hold you behind as a trader, right? So when you don't understand market structure itself, you only come to plot trend lines because you were taught that trend lines is to be drawn on these swing points. If you don't understand which of the swing is relevant, if you don't understand why is it relevant, you have to know, bro. If you don't know, you are this a lot of things will be holding you behind. Now I did this particular video because I want to make a reference to one of the trades we took on the third. I took the trade on the 3rd and then 3rd of January, and then I saw also most of my friends in the free discussion group took the trade. Shout out to Hot Kid FX, the guy I call Portable. He took the trade as well. Some others took the trade as well. I think Joe did. I think some of you, I can't pronounce your name, bro. South Africans, you have to be English names more. Try to, you understand? So uh so they took the trade, and then I noticed that a lot of people ran out of the trade. A lot of people ran out of the trade. We had the same focus, though I don't post my analysis on there. But I saw the analysis, I saw where they are targeting. I saw that that is where I was targeting. And before I continue, I'm going to show you guys my own analysis because I always do short clips to post on TikTok. So I did the analysis as well, and they also did theirs, and then we all had the same trade. We took the same trade, though we had different entry points and stuff like that because we refine our entry very, very well. So we had different entry points, but we were targeting, like, we were reading the same that bias, right? And also targeting the same zone, or the same. We had the same take profit. But along the line, I saw niggas run out of the trade. I saw that everybody they ran out of the trade because they don't understand these swings and why they happen. You don't understand why this guy is like this and this one is lower. If I ask you to tell me their names, you tell me this is a lower low, this is a lower low. That's what literally you were taught. If I ask you to tell me, they tell me this is a lower low and this is a lower low. But do you know why they form? Do you know why this is a lower low? Do you know what verifies to be a lower low? These things, there's something that Easy Hammer or somebody said, the psychology you are looking for is in the chart. Your trading psychology is in the chart. When you understand the discipline of you getting up in the morning, coming to the chart, you making sure that you have a particular amount of money you want to risk. If you lose that money, you stay away from the market. That is money management in it, and then the risk management. The remaining psychology you need are all in the chart. You see somebody enter a trade and then he's beating himself because he's reading negatives and all of that. If you understand these charts and then you know where exactly your entry point is supposed to be, you won't beat yourself when you wait for that entry to happen. If you understand this chart and then you understand that you have to risk as little. If you guys see the entries we take, you see how sniper or how the sniper entries are very tight, stop loss very tight. If you understand these things on the chart, you will not beat yourself even if you lose a trade, because you know what you lose is too small. Very, very little thing you are going to lose, right? So the majority of the psychology are all embedded in the chart. You see traders execute trades and then they run away from it. It is in the chart. If you understand that, this thing you sold here and then it's coming down, you are happy, right? Because it's in your direction. you are supposed to also know that yeah, this guy is going to come up to this level before it drops, but you don't know because you didn't dive into the education. If you understand how to drag the trend lines and how to press the buy and the sell on the meta trader, then you feel you are good, and you call yourself not a newbie. You are a newbie until you understand these things that make these things happen. You have to understand the reason why all of these things in the market unfold. You have to understand the reason why the chart moves, why is moving to this direction, why is it moving to the other direction, what is going to tell you that it is not valid in this direction, what is going to tell you that this one is not real. Now let's talk more. I think I've said a lot of intros, right? Now look at this chart, right? This is just like practically what happened on the VIX 10 one. Is that was the trade we took on the third. And when I'm done explaining the graph here, or the diagram here, I'm going to explain on the chart as well. So we are having this kind of downtrend, right? We have this downtrend. We have this downtrend. Clearly, if I ask you, people will mark me lower lows and lower highs, right? But before a lower low can be confirmed, now you know we are in a downtrend. When the first low is broken, you know that this is now a higher one. This is a higher. This is the high. This low originated this high, and then when this low is broken by this guy, then you know that yeah, when the second low. Do I have problem with English? No, I don't. I have to specify what I'm talking about. Now, you have this low, right? The initial low. It came up, then it came down. Then the market came to break this low. It came to create a low that is lower than the previous low, right? The market came to create a low that is lower than previous low, which is this particular low right now, which is this low. This low is lower than this low, right? But if you look very well, a lot of people will tell me this is the lower low, and then when I tell them to highlight higher highs and higher lows for me, you will see niggas coming through. What the noise? Sorry about noise. Sorry about the noise in my background. So, oh boy. So if I tell niggas to come and highlight me higher highs and higher lows, they definitely will mark this as a high, right? A higher high, and then they'll come to do this as the higher low, right? Sorry, as the low, which is the lower low. I'm talking about the lower than this. What am I? Lower low. Sorry. So this is exactly what they will do if I ask them to come and mark, or if I ask some people to come and mark the low after this, like, because yeah, clearly this low here is lower than the initial low we had, right? Which is trying to explain, which is the literal explanation of a downtrend, right? Creating lower lows and then lower highs, right? But what if I tell you this low is not the lower low? It is not the relevant lower low. Yeah, it's lower than this, but it is not relevant. This is the relevant lower low. I will not use this as my lower low. Even if yeah, the trend line automatically tell you if you drag this will definitely be out to be like inside the market a little. It won't be on the trend line. Yeah, it is not on the trend line, but this is not a lower low. This is not the lower low. The whole of this, the whole of this is one move. This is a leg. The whole of this is one. Though it's having corrective, this is what we call impulsive corrections for you guys so that I can remember. So this is a leg, right? Now the reason why this low, the reason why this low is not the lower low for this trend, though it is lower than the initial low. The reason why it is not the lower low is because this low didn't take out any significant pullback. When you have an impulsive leg to the downside, it definitely creates pullbacks and pullbacks and pullbacks and pullbacks, right? And if it's the same scenario when you have impulsive to the upside, it creates pullbacks and pullbacks and pullbacks and pullbacks before it keeps going. If you see a market run like this, then that leg you have to be careful with it. That is an impulse, like great impulse, because you can't analyze the impulse, you only analyze the corrections, right? Then you use the corrections to tell you when an impulse will happen. So this low is clearly lower than this low, but it is not the lower low of this move. The lower low of this move is this low. This is why. Now, until the current market is secured or closed, you can't tell what happened before it. That is something I will explain further sometime like next time. All right. Now, this is why I tell you that is not the lower low, because all of this move like this to the downside, This is a significant pullback. This is a significant pullback, right? But this is not a significant pullback because this pullback, this one like this, happens on this side of the market. It happened on this side, not from the leg, from this side. But all of this one happened from this side, this one happened from this side, right? Because when you come to mark the pullbacks now, this is very, very informative. This is something that helps you when you do profit trailing. When you're in a trade, you're not going to be scared if the market is pulling back, because I know many traders or a lot of traders, when the market, you execute or sell here and then the market is going down, you're happy. But when you get this kind of impulsive pullback closer to your entry, almost, or even sometimes come to your entry, then a lot of traders will run away. It's because you understand only the effect of the trend line and you don't understand the effect of the market, of the price actions itself. You don't understand the effect of the swings. If you understand the effect of the swings, you will not run away from your trade. All right, and then you also know where exactly to trade your profit to, because a lot of traders like trailing profit. But you see a trader execute trade here, sell, and then because of this pullback, this one pullback like this, then he believes that okay, the market will just come to bounce at this. Those who trade support and resistance come to bounce here since they have broken it, and then they'll put stop loss here. You see the market come to kick you out and still go away. It's because you don't understand that these things you are calling support and resistance, yes, they work. But I tell you guys that everything in the market works, but it is the way you were taught how to use it. It is the way you were taught how to use it. Now let me use the terms of support and resistance. When the market have this move, right, this is literally a support, and this is literally, you see, this is a resistance, right? This is another resistance. Those resistance that was created in the market have to come to take the significant resistance. It has to come to break above the significant resistance. This is how I use support and resistance in these ends. The market has to come to take or come above the significant resistance. Then whatever it does here, then you can keep selling, or before it goes down, until it comes to take that significant resistance that was created during the impulse, during the pullback, or sorry, during the run that is creating the lower low, until this guy is being taken out, until this high is being taken out with this move. This guy is not a lower low, though the structure clearly shows you that, yeah, it is lower than the initial one. All of these things, I tell you guys, the market is about rules. If you don't know these things, bro, it will be like the market hits your grandfather. So anybody that is carrying their names, they're in trouble. You understand? So you have to know these things, bro. You have to study. If you don't study, bro, forget about the blues you're making up. You have to work, bro. Know this thing. If you don't know this thing, bros, huh, come, come there, you will suffer, bro. You understand? So let's keep rolling, bro. Sorry about my warnings, but you need it, bro. You guys need it. You have to study these things. This is 2023. We're not take this thing personal, bro. So forex is an educational system itself, because oh boy. So now this low is significantly lower than this. A lot of traders will call it a lower low, but this is not a lower low. Why? Because it didn't take a significant pullback from the impulse that is supposed to call it, the impulse that created the lower low. You understand? This impulse downward created this low. But all of the pullbacks that were here, or the pullbacks that is here, wasn't taken when this one came back up. When the low sponsored another impulse to the upside, or a counter trend. The counter trend is supposed to take this significant high, right? That this impulse created before you can call it a lower low. It is the same scenario for the highs, or when you are in an uptrend. It is the same scenario for that. When you have this moves, you have this move, you have this one, you have, okay, this is where I settled it. You have this, right? Until a significant pullback was taken, a significant pullback from the impulse that created the other high. Until this significant pullback is taken, this nigga is not a higher high. You understand? Until a significant pullback is taken, this nigga is not a higher high. Until the significant pullbacks are taken, those swings that created the pullbacks are not relevant. I think that is the simple English, or that is like the literal English I'm supposed to use. Now this is the swing that created this pullback, and because we know here we are in the downtrend, in it, we are in the downtrend. So this is the swing, or the pivot point that created, or the equilibrium level, or the support, right? For those people who do support and resistance, this is the support level that created this counter trend to the upside, because we know we are in the downtrend, in it. So this is the pivot point or the support level or the equilibrium level or the a lot of names traders call it. This is the zone or the zone. This is what created this counter trend against our downtrend, right? Until this counter trend that is created takes a significant swing from our downtrend, from the impulse that created our downtrend, this market is not, this swing point is not to be called a lower low. It's not to be called a lower low. Bow. If you know Bob, ask me in the comment section. If you don't understand what I'm saying, or if I explain too scattered, or just say it in the comment section. Alright? Don't forget to like the video as well. And don't forget to subscribe because you need more of this. And we are here to help you. So until the now this is why now this guy became a lower low because it took out a significant high. It took out a significant high. A significant inner structure. This is an inner structure, because this is the major structure. This is the major low, major high. Then these are inner lower lows and lower highs. So until the inner one that was created within this higher one is swept, the market, the pivot point or the equilibrium level that created that reversal is not relevant. So now this is why I want to relate it to the trade we took. We all took the cells from this ends like this. We all took the cells from here, and then we knew somewhere the market was coming down, like deep down. And if you go to VIX 10-1s right now, I think it's now that it has filled the tick profit and then playing around. We know that the market have to come deep down, right? But the market created this guy, it dropped, and then when it created this guy, a lot of traders will be like, oh god, what the fuck? Why is it trying to reverse? You have to be chill, bro. If you understand this thing that an impulse have to create swing points in it. If you understand these things that an impulse have to create these kind of things in it, you don't have to just run down because you took the trade. You don't have to just because you sold. It doesn't mean that the market have to just keep selling, keep selling, keep selling. No, the market have to create these swings, right? So that those people who don't understand these markets or don't understand the rules, the main rules or the rules they are supposed to understand, they'll either get liquidated or they'll run out of their trade. So that those people who understand it can get paid properly. Because the market is a zero sum. It's what people put in, other people cash out, right? So when we sold here that day, this market was like this. It started reversing, and then Hotkey posted in the group, bro, what's up? Can somebody look at VIX 10? What is it trying to do? It's supposed to do this. And then me, I just will laugh you. I'll laugh at you because I know you didn't study. You don't know these things. If you know them, you won't ask these questions, bro. And when I say go and study, you tell me, nah, you're not a newbie. My guy. All right. So when the market did this, a lot of people ran out because they feel like the market is coming back to their entry, but it's not. You have to understand that the market have to create when it impulses from your entry or respecting your direction. You have to create counters. You have to create counters, right? Now, when these counters are being created and then it has gone very very low, it has gone very very low. It have to come back to take all of these counters, all of the little counters that were created. You have to come back to take all of these counters. That's why when you trade highest money concept, when you trade our trading strategy, you have to understand that the times people run out of the trade, the times people get liquidated, people when they take their stop losses, those are the times we enter. Our stop loss, your stop losses are our entries. Your stop losses are our entries. So a lot of people run out of this trade. Meanwhile, we were cooking to enter again because we know this guy will come back. We were holding, yeah, we were also holding this guy, right? We had this trade here, and then we were all holding whatever $100 it has given to us, right? When he came back here, yeah, the money reduced definitely. It's a default thing. The market, the pips can't reduce, right? It became from let's say $100, it started reading $15. But because we saw reading it's reading $15, yeah, we know it has to do that. Because we know that when this one is taken, we will get more of our entry criteria met here and then we will enter more of it. So that when next time this guy is coming back to the $100 for the initial trade, it will be like 200 because a lot of trades have been taken here as well. So bro, you have to understand the market very very well. And if you want to understand better how this market works, look in the link in the description below and contact us for proper mentorship. Alright, I'll be glad to walk you through. So because this guy is taking, that is why this is a lower low, a confirmed lower low. This is not a lower low because it didn't take any of the pullbacks, right? Now let's keep rolling. Let's go to the next higher lows and lower low. How do they clone this? Okay, all right, I think I'm messing up. How do they clone this? I don't even know, bro. I don't care. Clone. All right. This is now a higher low. Why? Because it broke this low. Now those ones are simple because it broke this low, so it is the higher low. Right? It broke our lower low, so it is the higher low. But how is the lower low valid? Where is the lower low? This guy, this guy now is a lower low. They asking me to command and drag. So this guy is a lower low now. Sorry. Where is our lower low? This guy is a lower low. Why? Because he took out the pullback. This is a pullback. He took out this pullback. You see, the market came, dropped, came, took out this pullback before dropping. So it is confirmed to be a lower low. But if he didn't take out the pullback, it is not a lower low. Just like here. This guy didn't take out the pullback. So it is not a lower low. Instead, he created another pullback. If the market only came to like take away only this pullback, this is still a lower low. Sorry. Take away only this pullback, this one, it is still a lower low because this is a significant pullback. But it took this and also took this. So that is why it is also a lower. This one is also a lower low. So this is also a lower low because it took this pullback. And then we keep walking down, right? So there, right? This is the higher low. Why? Because the low broke our lower low, right? Now we started going. Where is the lower low here? If you understand all the rules I just mentioned to you, the whole of these are not lower lows. The whole one, two, they are not lower lows. This is the only lower low that is relevant. This is the only lower low that is relevant. Why? Because when the market created this high, the impulse that came to break the lower low, where are the pullbacks in it? This is the pullback, right? This is a pullback. But the market didn't sweep the pullback, and there's no other pullback here. Instead, it created a high, came back down, it created another high, came back down. There's no pullback here, and these pullbacks were not swept. Now, since there are no pullbacks there, though these lows are lower than all of the lows that are here, they're supposed to be called lower low because of the way you were taught. When the low is lower, it's lower low. Nah, it's not lower low. When that pullback is not swept, the lower low is not confirmed. So why this is the lower low is because this was taken, and because since this didn't take any of the pullbacks, they are all pullbacks themselves. Since this one didn't take this pullback, this became a pullback. Since this one didn't take this pullback, this became a pullback. So we have three pullbacks here. One, two, three. The whole of this is just one move. Whole of this is just one move. That is why I tell you the lower time frame have or holds more information than the higher time frame. Because if it is on the higher time frame, this nigga will be something like this. It will be something like this on the higher time frame. When you understand the lower time frame, you get to understand that it holds more information, right? So immediately this guy is being taken, then you know that yeah, this is the lower low. But all of these, they are not lower lows, they are irrelevant because they didn't sweep any of the pullback any of the pullback that was created while the other low was what swept. So it's the same scenario for the bullish market as well. I didn't really draw the diagram because like I said earlier, I want to use this to emphasize on the trade we took on the third, right? Now, watch this video so that you can see the analysis we had on the third and where we spoke the VIC10 will go to. Then I can show you on the chart how these things was effective on the trade and how it will also affect your trading psychology. So guys, this is the VIX10 and this is the 15 minutes time frame, right? This was the time frame we used for the analysis, and this was the target we had. And we took the trade based on patterns as well, which was like this. And then our entry criteria, we had an entry criteria 3 for our entry. We have our highest money concept criteria. So we used the criteria 3. It was on the lower time on the 1 minute, and then it was like on the week here we took the entry, right? And we also had another entry here as well. We call that, when you come to look in the link in the description if you want to understand how we take our entries, right? So we had this, right? We had this on the lower time frame. We had this on the VIX 10 1s, and why we took the trade, I've said already here. We all took the trade here. I saw that those guys they took trades here as well. We all had the entry around here. We all had our entry around these ends. We all stood here, right? And we're all targeted here. We all target this low because we know that yeah, the market has to come to it. Then we also had this ascending channel or this expanding wedge, which is a wedge and it's expanding, right? So we know that falling is very, very essential. Falling is very, very high probability for the market to fall, right? Then Now this is where the part what is it called, the structure comes in. This was a low, right? Should I use the ellipse or the eclipse as it's called? So this was a low, right? We had this low, right? And then the market broke below this low. We're already holding this trade from here, and it was going down. Now, where is the significant pullback? If I say you should point out, this is clearly the significant pullback. This ends. This is clearly the significant pullback from this impulsive leg to the downside. So we had that significant pullback. I know that this market will come against this pullback first before we can keep going down. The market have to come against this pullback before the market continue to the downside. The market have to come against this pullback before it keeps rolling. Then we were holding this trade, and then when the market did this thing, this impulsive move, it was a 1 hour candle. The market did this impulsive move to the upside. All of them, they ran out of the trade. And I was laughing. All I do on the group is come to laugh at you when you mess up, because you don't want to understand the fact, or you don't want to believe in the fact when I tell you should go and study. You need to study. They all ran out of the trade. But why did this happen? They thought already this is a lower low. So you just need to keep creating lower lows, right? But this happened because the market haven't taken, since the low was broken and this high was confirmed to be a high, right? A lower high. All the pullbacks in it have not been taken yet. The pullback have to be taken. Since the pullback was taken, when the market came against the pullback, we know that it is time for us to get more entries instead of running out of the trade. We're all holding the trade here. I think when the market was here, I was reading the 54. Yeah, there's one lot size was a 54 pips to this end. Only when it came back here, it was like 15, right? And then all of them ran out of the trade because they felt that the market, like, they'll tell you, bro, look at the momentum it took up and then stuff. But bro, it's because you don't understand price action. You don't understand that the market, why the pullbacks happen, why it doesn't happen, why all the things that happen in the market. You have to know why. Especially any market you are trading. People will say you can't know everything in the market. You can't know everything in the market, but you can know the things that you're supposed to know in the market. All right. You can't know everything in the sense that you can't understand all the strategies. But your strategy, whatever you are doing, you have to know everything you have to know about it. So another thing, like another scenario again, is here when the market was coming down. What happened? Came very close to the TP. What happened? Because of this significant pullback that is here, the market have to come back to take it before coming to the take profit. So each time the market have an impulse that breaks a low, because when this was taken, this now became the lower low, because it has come to take a pullback in between the impulsive leg it had, right? So this became a lower low, confirmed lower low. Now the market came again to break the lower low, right? The market is now below the lower low, creating another low, right? But it has not come to take the pullback, the significant pullback that broke the lower low. So it had to come back to take the significant pullback here. It took the significant pullback here before creating another lower low. So the markets are easy as that. And then people who are plotting trend line, look at this end. A lot of people who are like trying to scale in or trying to tell you that they have this flag or that, they'll connect their trend line here, but definitely won't. This, bro, if you understand them, not only I told you guys, bro, only the trend line is not trading. Only the trend lines won't help you. Only the trend line can't save you, bro. It can't save you. Do you know what will save you? Look at the link in the description below and contact us. You get saved. I'm the Messiah. All right, so you have to understand this market to get saved. All right, so if you understand what I just said if you understand what I just said, you should know that when the market gives you this pullback, you're not supposed to plot your trend line here. This is irrelevant because it has not come to take this high. You know that this is a significant pullback. Until it comes to take the significant pullback, before you can look to draw a trend line where or anywhere. So when you understand structure, it helps you it tells you where exactly the relevant trend lines are supposed to be. It tells you that chill your emotion. This is what's supposed to happen. So you have to happen first before the market goes in your direction. It tells you that don't enter until this happens. You understand? So you have to understand the market structure itself. Understand swing points before you understand or before you think with your trend line you are good. Thanks for watching.